Hey everyone, how's it going? In this quick video, I'm going to go over my risk management plan, how it has helped me to be a much more consistent trader, and I hope to pass on the information to new traders out there, and I hope that it can help them in their trading career. Okay, so why is risk management so important? Because this is how it will make us as traders to stay for the long run, right? We're not over risking our trades, we're not overtaking our trades, and we'll have the capital to actually secure those better probability trades that will grow our account. Okay, so I'm gonna go over this really quickly. Um, Again, like I said in the early beginning, that different people have different opinion on how they want to enter and execute and their risk management plan. I'm just gonna stick to my what it makes sense to me and how it has helped me in the past and currently as well. Okay, so most simply, let me just look at past price action here. Okay, so let me just go into a while ago. This is around February 20. So let me just kind of explain what I do when it comes to risk management and why it has helped me. Your job as a trader is consistently making consistent return, right? It's very simple. You want your profit to be out much more than your loss at the end of the month or quarterly, then you will know that you're profitable. So how to stay consistent in this game? It's really important to understand that uh, how much you risk and how much you earn, what we call risk reward, it has to make sense, right? Uh, a good rule of thumb, okay, I'm just saying a good rule of thumb, whatever you risk for one, generally you want to get something like this, right? You want to risk one to get three, okay? This is just a very a normal way to see it. Different strategy may require a 1-to-1, right, or a 1-to-5, or whatever the case. Uh, that's all relevant. That's all makes sense in their trading plan, in their style, in their strategies. I'm just going over kind of what makes sense as an overall average a traders who's looking for that. So what I'm saying, if you have if you risk one and you get three kind of return on average, and if you just do the math right in a probability sense, let's say you take 10 trades, okay, just as an example, and you're a 50% trader, which is in my opinion already very good to be 50% trader in the game for a consistent long time. So if you take 10 trades this month and you're 50%, that means that you're gonna have five trade loss and you're gonna have five trade win, right? And your five trade loss equals to 5% loss if you're risking 1% per trade. And your five trades at one is going to give you 15%, right? So if you do the math, 15 minus 5 equals 10%, right? So if you can really, this all looks sounds really simple, right? But if you can really be a 50% trader, okay, and you're on average risking one to get three, right? So you can see in the math that you're never going to be not profitable in the long run, right? In this month alone, in this quarter alone, you're going to average something like this, right? That's if you're sticking to, your 1% per trade, right? Again, sticking to how much to risk is usually by a percentage of your account. Again, there's different strategy, different opinions. Some people can risk 1%, 0.5%, 2%, whatever the case, right? It has to be consistent, meaning that if you decide to risk 1% per trade, you're going to risk 1% for your next X amount of trades, right? You're not going to choose that this trade looks better, I'm going to risk 5%. This trade looks bad, I'm going to risk 1%. That's not how the game works. You're going to have to be consistent. This is where risk management plan comes in, is sticking to a percentage or amount that you're comfortable and you know you're going to be okay with. Let's say for myself, 1%, and sticking to a risk management plan where you're going to risk 1 to 3. So I know in the long run, if I take 10 trades, 20 trades, 30 trades, and I'm at a 50% strike rate, uh, my profit is there regardless. And why do people understand this, which is a very simple process concept, and they are still not profitable if they're 50% trader? Why? Is because people don't stick to the proper risk management plan, meaning that even though what I just rolled out is very clear and understandable, sometimes they just decide to risk 2%. Sometimes they just decide to risk 3% because emotion comes in. psychological effects, mindset. Trading is one of the toughest thing you can do out there. Your mind is not trained for that, right? You have revenge trading. You start executing more trades. That's out of your trading plan, and that's how people end up losing. It's not because their strategy doesn't work. I actually believe that most strategies or trading style or plan, their setups, they all work in their respectable way. They all work if you stick to that plan. But most people don't, and most people don't acknowledge that, right? We're human. We make human errors. People make mistakes, and there's ego in place. People lose money. There's ego, right? They think it's never themselves that's causing all these losses. It's actually the market or their strategies, their mentor, coaching, whatever, right? People blame others for all the time. They never blame themselves. Look deeply. Why do they execute a loss? Is it because really their strategy or whatever, or is it because themselves because they're not following a strict risk management plan? Okay, that's super important for traders to be in this game for the long run. You can talk to any traders out there who are successful, real or not, it doesn't really matter. Uh, ask them to tell you about trading plan and their risk management plan. You know, most traders who are successful, they're going to have a strict risk management plan because that is how the game works. Okay, it's not about getting the best strategies in the world, the best whatever. It's about sticking to a proper risk management plan. So whatever strategies you decide to use, whatever style you decide to use, they're going to work out because you stick to your risk management plan. Okay, so I hope that really clears out on my kind of risk management plans, and that's in my trading plan, right? I have people asking me about how I do my entries and stop loss. Again, that's related to my risk management plan and trading plan, right? So I'll go over this real quickly, just as idea, okay, just as example, not to go over too much in detail here. So earlier I said, if I'm looking for a trade, I'm always going to risk one. I'm going to get three in return, right? So risk reward would be 3 to 1, right? Very simple. So whatever any trades I'm looking for, it just has to be fit that criteria, right? So for example, uh, I'm looking at Bitcoin here. I see this kind of a bearish impulse, and then followed by a correction here, right? So if I was going to enter this position, let's just say theoretically, uh, I'll looking for a breakout from the structure, right? So I'll look for confirmation breakout from the structure. I'm looking for a target, right? I'm looking for a target, maybe the recent lows down here, okay? And my stop loss was just enough to cover the correction, just to make sure I have enough protection for this trade, even though if the price may go up a little bit more. So I want to make sure I don't get stop out on that, right? And this is again risk management plan. So looking at this trade right here, okay, so I'm looking for entry down here. Okay, I'm looking for the recent lows. If I zoom out a little bit, yeah, recent low around this area. So can this trade give me 3 to 1? Okay, so it's pretty much there, right? If we look at this properly, we're about 3 to 1 right here, right? So this, yes, kind of fits into my risk management and trading plan. I'm looking for a risk of 1, and I'm trying to get minimum of 3 to 1, which is right here, right? So this is how I would take any trades I want, any entry I want is always going to have a 3 to 1 minimum as a target, and that I can have potential target, meaning that if the price can continue breakout, I will secure more profit, right? So if I zoom out here, let's say that this was my initial target, the recent double bottom. But if I'm looking for a next entry, I'll probably look for the next bottom, right? So, and if that's the case, once the price hit here, and I can extend my target price to the next target, and that would be a 6 to 1 trade. So that would be a very good risk reward trade to do. Okay, so if you continuously implement something like this, okay, doesn't have to be my method or anything. My point is risk management, 3 to 1. You're consistent. You're making sure that this is what you do on every single trade. There's no reason why you shouldn't be uh, consistent on a profitable level, right? Even if you're at a 50% trader, which is already, I keep saying this, which is already very, very good. Okay. If you're consistently at even just a 50% trader and you stick to a 3 to 1 risk management plan, and like I said, the math plays out. It's a game of probability. It doesn't matter your strategies. It doesn't matter about how you trade or whatever the case may be. If you can be consistent in that case, there's no reason why you shouldn't be profitable. Your account may grow slow at first, and this is what caught most new traders to lose money in this career, is that people who generally start trading usually, I'm just saying usually, generally do not have a big account size. They're gonna start with whatever, let's say 1,000 US dollar or something like that, right? Something that's not honestly going to be too relevant for you to grow your account, especially growing it at a 5 to 10% a month, which is just the math I did earlier. 5 to 10% a month. Maybe in some new traders' eyes, is not much. Again, maybe they hear things differently, they see things on social media, whatever, right? I'm not here to talk about things in that sense. I'm mainly just talk about risk management. So people looking at 5 to 10 a month, they're looking at their $1,000 capital. Oh, geez, okay, so I make like $50 a month, right? So to them, it's not much, right? But what you understand is your what if your account size is now $100,000, right? What's $100,000 5%, right? That's $5,000, right? So you gotta see it in a scale point of view. It's not about 5 to 10% a month on my $1,000 account. It's not gonna be much. Well, what if you're consistent? Years after work, you're actually accumulating enough kind of your ability to be a consistent trader in the market, and you have investments, you have other people's money, and you're trading a larger scale now. So is 5 to 10% a month on a larger scale account like this, is that not good? I'm sure anybody would tell you that's great, right? Because if you can be consistent, I'm sure this money will keep going up, will keep going up, will keep going up. You're going to be trading larger account capital, and sticking to 5 to 10% a month is excellent when you're in a big large account. Okay, so be consistent, guys. Understanding about risk management plan really importantly, and because in this game, it's whoever's managed to stick around the longest is going to be the most profitable, right? The ones that are not around after a couple years, they generally lose a certain amount of their capital, and they decide to deviate from this. Okay, and I hope this video can really give new traders or experienced traders out there a perspective on risk management and trading plan, and how that will help you as a trader to be consistent in the long run. Okay, so thank you very much for tuning in, guys, and I hope to chat with you guys next time. Thank you.